Hello, today I'm going to talk about the Disclosing the Monetary System second part. What is the content? Well, as first I will say something about the central banking, then about the virtual money, and for the rest, the flow of money, how it's flowing through the economy. Okay, first thing, central banking. Well, we hear a lot about central banking, but what really is this central banking? Well, let's go further with this history of the monetary system. After the first coins with an assigned value and the prototypes of banknotes, the banking started spreading from country to country. People were pleased to accept such money, especially the banknotes, as the solution was very practical. However, people didn't grasp the bigger picture of this system as it was followed by the central banking. So in the end of the 17th century, it was founded the Bank of England that established a way of central banking as we know it today, so that small commercial banks are joined under the main central bank, that time under the Bank of England. This was a new step toward the mass control of population and politics. So we have one main central bank in a country that connects all the small commercial banks. At the end of the 19th century, it occurred a new big leap in the control of population, since it was founded the organization Round Table, which was engaged in taking over the foreign politics through the monetary system. But from here onward, I won't go any further into giving names and groups, since the basis is always the same, thus the control of the monetary flow, inflation and deflation, national debt, and so on. So, today's monetary system is based on the central banking, which means that the smallest commercial banks are linked to one specific central bank. The central bank is an institution that is printing money and overseeing small banks. Thus, the individual countries have their own central banks that are controlling the small banks in a country. In addition, some countries are consisted of a larger group, such as the EU and the US, where a common central bank is uniting all the smaller commercial banks in the group. Here it should be understood that the central bank is an independent, non-governmental private institution, as they were also the first safes or banks, the seats of banking. This means that governments have little or no control over the central banks, because they are private institutions. And this despite the fact that they are working closely together. Of course, they are working closely together. And you will see now, when I'm going to talk about this flow of money. But first, let's go to this virtual money. What is this virtual money? Thus, the old banking was based on coins of practical value, on promissory notes, on receipts, and on the first banknotes with an unassigned value, with a number. But the mechanism of banking has very little changed up to this day. Instead of practical coins, we have today mainly the banknotes, while we have in circulation, instead of the promissory notes and receipts, more and more virtual or imaginary money. But what is this virtual money actually? The virtual money is the money that is flowing mainly through the transactions with debit and credit cards, so as transfers to other transaction accounts, also in the form of loans and standing orders. The virtual money is managed via computers and has no tangible or physical equivalent. This means that the value of your account of the bank on your bank is imaginary rather than physical in the form of banknotes in the bank, because this bank reserve is limited in the form of physical banknotes. So all of your money that you have as payments from your jobs is mainly imaginary number on the computers. It's not physical money. This means that the value of your account in your bank is imaginary rather than physical in the form of banknotes in the bank. Your account is merely a number, just clean computer bits. If you realize this, then you know that there is more and more virtual money in circulation. Now we have a lot of these credit cards and debit cards, and we are paying less and less with this physical money, even less with coins. So, Thanks to computers, the virtual money is enabling us an easier and faster business. Of course, it's more practical, but especially an easier and faster supervising of the money in circulation by the bankers. When it comes to the main weapon of banking, it hasn't actually much changed. These are still interest-bearing loans that are the driving force of profit. Because without loans with interest, banking would collapse. But of course, the banking as it is working today. But of course, they aren't gaining money only the banks, but also the wealthy individuals by binding their money, because a large part of the interest of loans from the citizens is transformed into the positive interest onto their bank accounts. So the bankers are gaining huge money, especially the elite, as I call it, the status quo, the corporations, the wealthy individuals. But of course, they're gaining money also by, if you bind your money on a certain bank, from where they come those interests? Where? From the poor people, because they're taking various loans, and the interest from these loans are transformed into the positive interest of your binding money. Because be sure, the bankers they are not going to give you any money in excess money. The money is just flowing from one to another, from the poorer ones to the richer ones, or vice versa. The richer ones can become poor, and the poorer ones can become richer. Like I said in the previous lecture. In this system, interest system and tax system, we cannot be all wealthy, all rich. This system requires poor people. So, but let's go further, step by step. Okay. The flow of money. As next, they follow some interesting facts of how the money is circulating from the central bank to the inhabitants, then to the economy, companies, and back to the country's account or the so-called treasury. So now you know another term, treasury. This is the country's account, and now we'll see more how is all this working. First point. First, it's not the central bank the one that automatically pushes the money into circulation in a country. No, but the government of a country is the one that asks the central bank for a certain sum of money, because the central bank is a private institution, an independent, non-governmental private institution. Second point, the required sum of money is essentially a loan to a country. It's not just some money that is given away like this, it's a loan. But not only that, because the central bank also charges interest for that required sum of money. This means that the country should return the required sum of money and the interest money sometime in the future. And so it is generated the national debt. Now you know another term, national debt. Further, here I'm talking mainly about the basics, but they are the most important ones. Further, however, have you in this asked yourself where is actually the money for repaying the loan? Well, if you take for example the first shipment of money into a theoretically empty circulation, inhabitants, country, where there is no money in the treasury either in this country's account, then this means that the money for paying the interest practically doesn't exist, isn't it? If you take an empty, like there is no money in circulation, the first shipment, like that new type of money is emerging. So, but the central bank can create money out of nothing, be it for the required sum of money, the required sum of money by the country, and be it for the interest money. Pay attention. This means that after the creation of the new money, the bank has, in addition to the required sum of money, also the interest money. The interest money that is going to be in the future repaid to the central bank. But this must exist in the beginning already. Isn't it ironic? Further, the central bank pushes the required sum of money and the interest money slowly into the circulation through the commercial banks, so that the money is coming flowing through the consumers, the economy, and the taxes back to the bank. Some money is printed as banknotes and some as minted coins, but the majority of it exists in the virtual form, like I said. This country's account, treasury, it's just another account on a bank. It practically doesn't matter where it exists, on what bank, because all banks are connected to this central bank. Further, but what would happen if a country would theoretically all of a sudden return all the required sum of money, including the interest money? Well, if we again take, for example, the first shipment of money into a theoretically empty circulation where there is no money in the treasury either, then in that case there wouldn't be any money in circulation, isn't it? All the money, the required sum of money, and the interest money of the central bank goes into economy, taxes, and again into the treasury, the country's account, and so there is no more money in circulation. All is repaid. And this has happened, I think, in the history, and the system collapsed. I think one president of the US did this because he knew the mechanism of working. Okay. From this insight, it follows that the national debt shouldn't be repaid fully, the entire, because if it would, then the banking would lose all its meaning. The banks would collapse. So you hear a lot of this repaying this national debt. This national debt is rising. Of course, it's rising because of the interest, and this rising is going to rise, and rise, more or less. So in this mechanism of the banking is written that the debt shouldn't be repaid fully, entirely, because then the banking will collapse, the banking system. Further, but all of the money that was created out of nothing, be it for the country's loan, be it for the interest of the loan, will the central bank push through commercial banks into circulation, like I said. However, this money will be once again an interest-bearing loan to various commercial banks, exceptionally as interest-free loan. So, the first sum of money that was required by the country goes into circulation. But all the commercial banks can have their individual loans that are coming from the central bank. And so there is again a new sum of money and interest money. And so the central bank are gaining, let's say. Practically it's coming from them. So it will once again create a new out of nothing money, this time for individual interest, for us citizens. And so the banking money is accumulating day by day. But despite the fact that the country shouldn't repay all the debt because the banking would lose all its meaning, it often happens that the country cannot repay even a part of the debt. If the money flow to the treasury, which is again an account in the bank, like I said, is often too slow. When and what happens when a country cannot repay even a part of the debt? It's again ironic, but the fact is that the country asks the central bank for a new loan, and this just to repay a part of the national debt. However, the new loan requires new interest, of course. And so that's why the national debt is increasing all the way from the first shipment of money into circulation. Okay. Here I will add that I said that sometimes the interest-bearing loan to various commercial banks can be as interest-free loans. Yes, sometimes the central bank can allow these interest-free loans to commercial banks. If there is a really unstable, it can cause this some kind of instability of the monetary economy. Okay, further. Thus, the central banks that are operating according to the system cannot just go bankrupt, because the central bank are always supplementing their money with new out-of-nothing money. It's not like in our history, some centuries ago. Now we have this virtual money, and it's less and less binded to this gold, oil, and even bank reserve. It's also virtual. They can print as much money basically as they can. The only crucial thing is that there must be not too much money in circulation, especially in the form of loans, because then it can come to inflation. But especially because there are limited natural resources, you can produce just as much as there is workforce and raw materials, and these are limited. Further, mhm. So only the commercial banks can go bankrupt, and especially in the case if all the citizens will suddenly require the payment of their savings, suddenly, in the form of banknotes, physical banknotes, as the bank's reserve will deplete. This means that when we hear about a bankruptcy, it goes about the bankruptcy of some commercial bank or a country itself, not about a central bank. They can print as much money as they can. They are the source of money. Mostly it goes for commercial banks when you hear about bankruptcy. But of course, the banks, commercial banks, can have this payout limit so that the bank reserve is stable, more or less. Further, both the central bank and the government are analyzing the flow of money, but the central bank is the one that finally decides about the interest rates and the time for repaying the debts. This means that inflation and deflation can also be intentional and not something uncontrolled or accidental. For example, if the banks issue intentionally too many loans, it can cause an artificial inflation effect due to the excessive number of loans and money in circulation. It can the sum of money in circulation increase so much that the purchasing power of population overly increases. But this is followed by large consumption because people have this rebellious ego and are not satisfied. They want to buy everything. So, this is followed by a large consumption and the subsequent accelerated increase in prices of goods and services, especially if the GDP, gross domestic product, is low. If a country's economy capacity is small and cannot keep pace with the citizens' needs, better said, the citizens' greed, which means the devaluation of money, thus the inflation. You can produce just a limited amount of products. And because money has no purchasing power, the prices of goods and services are rising. This money quickly then disappears from circulation onto the side of economy, while the economy has, mainly through taxes, brought a part of the money into the treasury, this bank's account, country's account. The circle is then concluded as the country has some money for the repayment of the national debt. So if it comes to this inflation, it can be just for this that the country has some money for repaying this national debt, and even if the country becomes impoverished, it doesn't matter. Further, the curve of money circulation and deflation is constantly fluctuation, and sometimes it can cause catastrophic situations because if the inflation is too high or the purchasing power value of money too low, the economy goes into recession or into the decline of economic capacity. So now you know another term, recession. This means the decline of economic capacity. Since people practically cannot buy anymore, while the economy is no longer selling, of course. there was a lot of money, people are buying and buying, they bought everything. They cannot produce because the natural raw materials are limited, workforce is limited, production is limited technology, so they cannot buy anymore. This means recession. People can, however, the recession occurs also at an unaltered consumption. For example, if the prices of raw materials for economy, factories, and other establishments suddenly increase. It can come even to this that just the prices of raw material increases so that the companies cannot produce new products. And this means no selling, low payments for workers, or even none. But the recession can occur also when general consumption is falling, either because of our fear and the eventual savings, or out of our awareness to buy less. So the media can generate fear to buy less, and so you have eventual savings. And if people are not saving, this means no selling and no salaries. Or out of our awareness to buy less. This is the best one. Buy only what you need, be ecological. And if all of us are ecological, this means that the companies are selling less and less. What they are selling are mostly very ecological products and services, and this is very good. Because today I'm going to talk in the next lecture about non-economy, today's non-economy. Because today's economy is working so that they are just producing many things, services and products that are practically unnecessary. They are very polluting our environment. Just so that the flow of money is circulating, they are selling things. Okay. Well, now you know some basis of the modern central banking system, the flow of money. Often you find the monetary function very complex. Well, the system is pretty complex, but the basic functioning is in essence very simple. In addition, our media is daily showing us the complexity of the system so that it dissuades the average person from the real essence. This is the real essence. So the central banks have enormous power over the money flow and everything that is related to money, including the politics, basically everything, even the conduction of warfare. And precisely the warfare is the most profitable for central banks since, in the circumstances of warfare, are the countries asking for large loans, primarily for the manufacturing of weapons and ammunition. So, when a warfare is taking place, the central banks are in the status quo. These elites, corporations, leaders of the hierarchy are grabbing a huge profit from the loans of the attacked country and from the loans of the attacker country, from both sides. There are loans from both sides, from the attacker and the attacked country. And especially the Vietnam War was very profitable as it lasted the longest, more than 2 decades. The point for accumulating money by the bank is that the war is lasting as much as possible. It doesn't matter how many people are killed, but just that the war is lasting as more as possible. So, but do you know what is the most absurd product of the monetary system? The stock exchange. Yes, the stock exchange is creating money out of money, and by itself is practically nothing producing or offering, thus no products or useful services. There are no products, nothing to eat out. There are just money, just money. And we cannot eat money. So, because having pictured this, everyone is rich full of money, but there is nothing to buy. We have no natural resources anymore, and this is possible. So no food to eat, but we have a pile of money. And it can come to this, yes. So pay attention. What are you buying? Buy the things that are very ecological, friendly for the environment. Only what you need, because the companies are going to produce what people will buy, because don't expect too much that countries are going to put some into action some laws or regulations that such and such products cannot be in circulation. People I mean, the sellers, the companies are going to produce more or less the things that people are buying. So, and you know that on the stock exchange can quote even the private prison companies. Yes, this means that the value of their shares is depending on the number of prisoners in jail, or on the money that is circulating there in jail. I don't mean the money of the jailers. I mean, the more jailers there, the more prisoners there is, the more food is required, the more clothes are there required, the more electricity is there required, and this means the flow of money. And this means that their shares have a higher value. Um, so, the greater is the number of prisoners, the greater is the money flow, and the greater is the value of their shares. If you draw a line to finish here, then the monetary system is troubled by the fact that it is causing in the hands of people with the rebellious self or ego more harm than good. But once we will tame our rebellious self, then we will introduce the economy based on natural resources. This means non-monetary economy. There it will be taken care for everyone, poverty will disappear. Like I said, poverty cannot disappear if you have an interest-based monetary system and plus the taxes. If you would have an interest-free monetary system, then the poverty will disappear, of course. So, if you may go step by step, the first thing is to have an interest-free monetary system, thus loans without interest, and even the money that's coming from central banks to commercial banks is good that they are without interest. And further, with a life without tax. Okay, this is all for today. The next time I'm going to talk about the economy. I mean about non-economy, today's non-economy, how it's influencing this monetary system, the services, products, and our life. Okay, have a nice day. Bye-bye.